Leaving the house just for a moment because we've got the RBA about to make its first decision on interest rates for the year. The scene is set. We're expecting a hold. You never quite know what to expect, though. We've got our business editor, Ross Greenwood, standing by for the very latest on this. So, Ross, the expectation is a hold. And, of course, we'll have this very interesting news conference, the first one from the governor later on today. But what are we bracing for right now?
Yeah, pretty much it's going to be whether the Reserve Bank changes its language in regards to interest rates and inflation. So that's really pretty much where the US Federal Reserve and the Bank of England have gone in the past week or so. And so though this decision is expected to be on hold, it's whether it gives some guidance as to whether there are rate cuts later this year. The one aspect of this is also going to be very much that the Reserve Bank up until now has had really a bias towards raising interest rates. Now it may very well take that bias away and suggest, therefore, that there are interest rate cuts in store for Australian families into the future. So this decision will keep the cash rate at 4.35, and it is indeed right now at 4.35%. So as expected, it is on hold. And so it really goes down to the language of the Reserve Bank as to what they say and the way in which they think about this new mood. And as I say, you'll pick up a lot of that at the press conference that Michelle Bullock, the governor of the Reserve Bank, will hold for the first time in her sort of term as the governor, which will be in around an hour's time.
All right, so I'll let you have a quick look to see if there's anything else you need to get on top of there, Ross. But I think the interesting thing for anyone with a mortgage is, you know, if you read a lot of the analysis, it's almost this assumption we've got rate cuts coming later on this year. That's very forward thinking, isn't it? We've still got inflation with a 4 in front of it. And if there's a soft enough landing on the economy, there might not be those cuts necessarily. So that will be part of the interesting shift in this language. Is it a shift towards neutral, or is there a sort of bit more of a watch on potential cuts coming?
Okay, let's keep a little eye on this, because really right now what you're seeing is this is the latest statement coming out saying returning inflation to start target within a reasonable time frame remains the board's highest priority. So not much has changed there. It then says the board needs to be confident inflation is moving sustainably towards the target band, but it says recent data indicates inflation is easing. Now the board expects it will be some time before inflation is sustainably in its target band. The path of interest rates that will best ensure that inflation returns to target in a reasonable time frame will depend upon the data and the evolving assessment of risks, and a further increase in interest rates cannot be ruled out. So that bias has not disappeared at this stage. Now you can see here in the corner of your screen the stock market. So the stock market before this decision was down by less than 0.5%. It's now dropped. So really this is in some ways disappointing to the markets because it's not what they were expecting. It's not as dovish as they expected, more hawkish as I would say, because they're still suggesting there could be another interest rate cut to come, but rather rise to come, to make certain that they do defeat the inflation that is still in the Australian economy. So that is a surprise here. They have not really toned down their language as they have in other parts of the world.
So just briefly, the point being made there, that the last time we heard from the RBA, they hadn't had this quarterly inflation, which was way below what the RBA itself was forecasting. And yet, in particular, look at that last headline on the statement, Ross. It says returning to inflation to a target is the priority, just in case anyone out there was thinking it was, you know, looking and almost thinking, oh, yes, we know you're expecting a rate cut. We're thinking about that too. Inflation, that's what they're focused on.
That's the thing. And also just that line that I told you before, a further increase in interest rates cannot be ruled out. That is the key line there. That was what was expected to come out. And so it shows that the Reserve Bank, which is conscious of the fact that our inflation rate is higher still than other parts of the world, particularly the United States. And so they want to be absolutely sure that it's heading down towards 2% before any interest rate cuts are coming for the Australian economy. And as you point out, that may well be now next year, and not as many people suggested as many as 3 interest rate cuts this year alone.
Yeah, it's not like they wait for 2.9 and press the go button, in case anyone was in any doubt. Very good insight there, Ross. Thank you.